What are some things to think about in our journey to retirement after divorce? My name is Chris. Welcome to Heavy Metal Money. Hi, welcome back. So we're going to talk about the D. No, not that D. We're going to talk about divorce. I won't spend too much time on the actual separation and divorce from my wife of nearly 15 years. But divorce happens, and it can suck. It can be for the best. And it's interesting, the divorce rate has been declining in recent years. However, we're still at about a 50% divorce rate. One study stated that the divorce decline is most likely due to people waiting to get married later on in life. When I was younger and we were married, didn't give any thoughts about personal finance until my separation. I was following the old school legacy way of thinking. I went to school, I got a job, and I work until I die. That's what I thought you were supposed to do. And, my wife and I were often pretty frugal anyway, but, I purchased my very first car, brand new car off the lot. I was making $7.50 an hour. Pretty remarkable, right? Now, we got married in 1998. Seems like a long time ago. Got married in 1998 without a pot to piss in. We didn't have a lot of money. Again, like I mentioned, making not even what minimum wage is today, right? We got married on a super tight shoestring budget. We saved money wherever we could. I have a complete separate post and a video on how we saved money when we got married. Now, early on in marriage, we had debt, just like everyone else, right? We incurred debt. We had our home debt. We had our car loan. We had some student debt. We had credit card debt. We often tried to pay more than the minimum, and we would sometimes, most often, we would pay off the credit card statement in full, but not always. And then we also made really stupid money decisions too. I remember, being this long-haired metal banger, I needed a new amp. I needed a guitar combo amp because I'm going to be in a rock and roll band, yo. And so what did I do? I went and I financed my very first amp, very first thing I've ever financed in my life. And it was this Crate GT 200 combo guitar amp, which I still own today in its Anvil Road case. But I get sick to my stomach knowing that I probably paid, 27% interest on that thing. At the time, all that mattered was I could pay the $23 a month for that amp. It's crazy that we just went with the rest of the sheep and we went through all of those things just like regular, everyday, normal people that had debt. And we had this, mindless spending. I would just spend mindlessly on autopilot. Well, this all changed when we split. All of a sudden, I realized, oh crap, right? It was like an oh shit moment. Oh crap, I'm going to be responsible for living on my own. I was going to be responsible for paying my own bills. I'm going to be responsible for paying the mortgage, my car payment, the utilities. Oh my God, can I afford child support? Was there going to be alimony or spousal support? Oh my God, it was a shock to the system. And I was terrified, right? Finance, right? Finance, personal finance, when going through divorce can be scary. But I immediately had to take action. And here's some of the very first things that I've done when I started to go through that process. Very first thing, review expenses. Now let's actually get this out there. When I was married, and for however long I was with my wife at the time, I never paid a bill. I never did. I never balanced a checkbook. I hardly ever really looked at our accounts. I would go to work, the money would direct deposit into the account, and my wife at the time would do all the books. She paid the bills, she paid the credit card bills, she paid the utilities, she She would file taxes. She did that. She was good at it. Hindsight, yeah, I should have taken a more active role in what was going on. So now this shock to the system, all of a sudden I was responsible for these things that I have never done before. So one of the very first things I had to do was review expenses. Now, it took a bit of learning, right? I had to review utilities, what we were spending on the garbage and electricity and the water. I never even really looked. I had no idea what we were spending on those things. Well, again, one of the first things that I saw was, I was paying over $100 a month on Dish Network. A bunch of channels I never watched. So again, one of those things can go. But also, I quickly realized that there are other things too that I could get rid of. So then the next thing I had to do was really review my mortgage, and I had to go through the process of refinancing. And this was hard. It was hard. It was complex. It can be scary and a daunting process, again, if you've never done it before. But also it was hard because we had already made so much progress on the existing mortgage. So we moved into the primary home, into this home in 2002, into our family home. And one thing we had been doing is something called, what our lender had called, the Equity Accelerator Program. This was a program offered by the lender that allowed us to make payments every 2 weeks. So you're making payments twice a month. And what this allowed us to do is basically save thousands of dollars in interest and several years off of the entirety of the loan. So we had already made a lot of progress over that on that mortgage when we began back in 2002. Now you got to be careful because some lenders, they charge a fee if they allow you to do that. I think things are a lot better now, but this was, again, back several years ago. So sadly, I had to start over, right? I had to refinance the home. And because I had to make sure that my lower monthly payment, right, was low enough that I could pay for all of my monthly expenses and utilities and groceries and gas to get back and forth from work. I had to make sure I could afford that all on one salary. And so I had to kick off a brand new 30-year term on my mortgage. Now, again, hindsight, should I have refinanced to a 15-year? At the time, I just wanted to save as much as I could per month so that I could still have as little disruption as possible. The very next thing I had to do was create something called a budget. What the heck is a budget? I didn't know. I had never really had a budget, right? I usually had this thing called, I probably have about this much in the bank. That was my budget. That was my method of budgeting. I really didn't know. I didn't look. It was out of sight, out of mind. And I just knew I had about that much in there so I could afford to, go out to eat, or I could afford to buy that new release or something like that. But those bigger purchases, I often would talk it over with my wife. She was more or less in charge of the money. I would talk it over with her so that if I had to buy, a brand new iPhone came out or a brand new MacBook, maybe it was the new Iron Maiden box set that came out, maybe it was our robotic lawnmower. I wanted to make sure that I went through that with her, really kind of justifying the want versus need. What were the benefits? That type of thing, so that I would get kind of the green light in, yes, I can get that. I remember going through this a lot when I wanted to purchase the original Power Mac G4 Titanium. And I remember, man, it was the fastest laptop on the planet. And it took a lot of convincing for me to get that. But yeah, so I had to review those expenses. And so I needed to budget, and I graduated from using like spreadsheets. I was using like numbers. Excel was just too much for me. And then after that, I graduated to kind of using online services like Mint to kind of see all of those expenses because, face it, I was horrible at spreadsheets anyway. Now, the next thing that I had to do was open brand new accounts. And this was huge because I opened up brand new individual savings, checking, and credit card accounts. And I then changed any automated deposits, expenses, and deductions to use these brand new accounts. And it felt awesome to start with this clean slate, right? I felt empowered, and that now I wasn't spinning out of control, and I could absolutely do this on my own, right? I started to get that confidence. Now, this next one, again, some people may frown upon this, but the one thing that I did is I stopped investing for a period of time. I know some people were like, never do that. Always keep paying yourself first, right? Now, at the time, I had maxed out my 401k contribution at the employer. I was at about 15% of my income into my my tax advantage 401k plan through my employer. But I had no idea what my living expenses were really going to cost. I was still working out, how much I was spending everywhere, and I wanted to make sure I was never short, right? I didn't want to feel that pressure of not having enough money. So one thing I did for a short period of time is I stopped that contribution. And so I want to make sure that I could pay the bills, at least for the time being. So I stopped contributing to the 401k. And also, the way we understood it, at least here in the state of Minnesota, the separation of assets, the retirement accounts, typically they're combined and then separated in half. That's how it starts anyway. So here in the state of Minnesota, everything in the divorce can be negotiated, like everything. And so, I'm not going to get too deep into the actual specifics around the actual divorce decree and the splitting of the assets, but this can all be variable based on what state you're in, based on if you had attorneys do it, if you've done it on your own, if you've, we actually did ours online at the Minnesota judicial website. And again, we'll have another post specifically around that process. But luckily, my former wife and I had a pretty reasonable separation, and we were as amicable as we could be. And that really did help. Now, the one thing that came out of going through this process, and divorce caused me to be intentional. So my budgeting, my saving, my investing, my spending, it allowed me to stop living on autopilot, going through mindless spending. It forced me to take a step back and dig into, what do I find value in? What are my wants versus needs, right? And I learned what I don't value. And let's not spend money on crap that I'm not getting any value out of. Save that money and put it towards something that makes you happy. And we're going to learn more about that in future posts. But if there was a sad turn of events that caused me to go through this realization, to make the best out of a bad situation, it did force me down to this beginning of my path to financial independence. And so if we now dig in, really is, well, let's actually review those expenses, right? That's what we want to get to, the meat and potatoes here. Let's review the expenses and how I built my very first budget. And so we're going to dig in deep, and when we reviewed the expenses, I needed a way to review all of them. And over time, I needed to see where every dollar was going. It was kind of a mystery. It just kind of went into a black hole. And you never remember, the next day you could did I stop at the gas station? Did I fill up? Did I buy a pop? Maybe I bought a pop and a Jack's Pizza. Oh, you know what? I went to lunch too. I went to Subway. I mean, there's all this money. You don't remember the next day. So I needed a way to see this. And so what I did first was just a sheet of paper and a pen. I started writing down all of my expenses, logging into my accounts. Again, some of this for the very first time. I'm logging in to my checking account. I'm logging into my credit card account. I'm writing things down. I'm looking at categories. I'm looking at how much I was spending in all of these different categories. Okay. And this simple task alone was great because it started to put everything in one place. I could start to visualize where my money was going. As I started to migrate, into more modern systems, one of the systems that I used was Personal Capital. They offer a great free dashboard that allows you to connect all of your accounts, not only your bank accounts, but also your investment accounts, also your debt. You can actually connect your credit card. You can connect your auto loan, your mortgages, so you can get a good dashboard to see not only where all the money is going, but how you're doing, right? This dashboard, so you can kind of get that motivation on, let's go ahead and knock out this debt. Let's go ahead and see, oh, I've been paying this much on this frivolous expense that I don't need. Personal Capital really helped me, and if you'd like to give it a try, go ahead and use the affiliate link below. Now, Personal Capital was really great for the big picture, but I needed to get more granular. I'm talking every dollar. And so I then started to use Mint by Intuit. And why I liked this is because I felt as though the way they did automatic placing your expenses into appropriate categories was pretty good. Was it perfect? No. But a lot less of me going in and changing which category it is, right? If I bought something on Apple Music, where does it show up? What category it is? If I bought gas at Holiday versus Citgo versus Speedy or whatever, I didn't always have to change the category. So I felt Mint did a way better job of that. So I use that for my daily expenses. Let's look and see what those transactions are. And they'll give you a graph showing those categories. You can easily see how much you're spending on business services, travel, fuel, entertainment. Again, a great tool. And so I linked all my accounts and was able to start to see a pattern. One of the very first patterns I noticed, I quickly realized my lunchtime was horrible. I could see Subway, Taco John's, McDonald's, Wendy's. My fast food spending was out of control. And so easily I could see, because again, it's mindless spending. So again, when I was traveling, to and from job sites, different customers, or if I was traveling downtown Minneapolis to the office every day, I would often leave and I would go to the Skyway and I would buy lunch. It was horrible. So immediately I could save like $250 a month just by eliminating my fast food spending every day during lunch. And that was just my lunch. Next was, we talked about it before, I noticed Dish Network. I was already paying for Netflix. I was already paying for these other online services. There was no need for me to keep Dish Network. Let's go ahead and trash that one. Also, services, we talk about it in my other video about saving money. I just bought an antenna. I get free local programming and free Vikings games. I don't need Dish Network. And I know people that are paying like $200 or $300 a month on satellite and cable TV services. Just crazy to me. So next I had to drill down on utilities. And this was really hard because I had to go drill down on everything from, water and sewer to electricity to natural gas, the garbage bill, and cell phone bill, right? I mean, all of these utilities I had to really dig in. And some of them involved, making the call, logging in. I didn't know the login. I had to reset the login. I mean, it took time. But like for one thing I did, one of the very first things was my cell phone plan with the kids. Me and the kids were on a cell phone plan, and I dropped I believe it was AT&T at the time. I had $180 a month I was paying for our cell phones. That was crazy. I was like, what am I doing? Now, I was able to get that reduced down to $110 a month. Still crazy expensive. I get it, but I'm making progress. I understand I could save a lot more money. I could switch carriers. I could do this. I was doing low-hanging fruit first, and so I was able to do this online by switching the plan to a less data plan. I just had to tell the kids, hey, use Wi-Fi. Just use Wi-Fi. And I'd get the eye roll like, oh, well, Wi-Fi is so slow at school. I just turn it off and use it. Yeah. You know what? I don't want to hear about it. So use Wi-Fi whenever you can. And I was able to save, again, about $70 on my cell phone bill every month. Other things, like I mentioned, the natural gas bill, I was able to enroll in something called their annual budget plan. And this helped me because it evened out the payments about $52 a month throughout the year. And this made it so much easier to manage because it's predictable, especially in like the peak winter months, right? I mean, we get the crazy polar vortex here, right? And so it gets super cold, double digit below zero, where then all of a sudden my natural gas bill can spike into the triple digits. It's crazy for those really cold months. So being able to split that up even across the entire year, I now know that I have that $52 allocated. That's what I'm going to budget for my natural gas bill. Now, one thing that's often not talked about, and again, I have another post specifically on reviewing your insurance. Believe it or not, we should review our insurance whenever there's a major life change. People often kind of dismiss it. They never really revisit their insurance. And so what I did was I met with my insurance agent, talked about how, the structure of my family has changed, right? We had a major life change. This is what's going to happen, where I'm going to live. This is my vehicle. This is how far I drive. All of those things that go into account. And I was able to save hundreds of dollars a year on my policies because we could look at what coverages I had versus the premiums I was spending. And maybe I could adjust my deductibles on my car and my homeowner's policy to really drop that premium even lower. And since then, and this all happened, back in 2015, 2014, maybe it was long. Might have been earlier than that. When did I split? Anyway, this happened years ago. And so we continue to do that every year. I meet with my insurance agent. We review policies. We review coverages based on my needs and what offerings they have in terms of premiums. And I have saved money every single year with my agent. And I'm so confident, and I feel as though that I really get value from meeting with my agent that I have since brought him additional work. All of my investment properties, I use him from insuring my rental properties as well. So anyway, we'll talk about that in another post. But review insurances. That's one of the next steps I did to save hundreds of dollars off of my policies. Now, one thing that we can always talk about is personal finance is personal. There's always going to be differences in opinion. Now, I do feel that I'll pay for what I value, and what brings one person happiness may not for others, right? And for instance, while one person may continue to eat out most nights, I would rather have peanut butter and jelly. I'd rather spend that money on a ticket to a live band, right? Let's go see a live show, right? Save that money up over a couple months and go see a live show. While many people will order a couple drinks with dinner, that's fine. Or you could order water, and I'll use that money for fancy coffees throughout the week. It's a trade-off, right? What do you find value in? I want to know from you, what do you find value in? And if you are thinking about or have gone through divorce, I'd love to hear from you. Please place your comments below. Make sure you like and subscribe, and we'll see you next time on Heavy Metal Money.